Morning to one and all. Today we are going to start with the new topic of general meetings and dividends. Okay, we'll cover this both chapters of Companies Act. It's a very, very important topic, general meetings. Okay. So there are a few important sections which we are going to discuss in today's class and with all the basics of the general meetings. Okay, fine. So generally, what is a meeting? As we all know, meeting is nothing but a group of people coming together discussing on few topics. Okay, so here in case of a meeting, there should be minimum 2 or more members, and for every company annually there is a general meeting which takes place at the end of the financial year in order to share the information regarding the happenings of the company to their shareholders. Okay, now generally the meetings are classified into 3 types broadly. They are like shareholders meetings, directors meetings, and other meetings. Okay, what are shareholders meetings? When it comes to the Companies Act 2013, shareholders meetings are of 2 types: annual general meetings and extraordinary general meeting. Previously, according to 1956 Companies Act, there is statutory general meeting also, which is not there as of now. There are only 2 according to the Companies Act 2013. That is annual general meeting and extraordinary general meeting. And when it comes to the board of directors, there are again 2 types of meetings: board meetings, and another one is committee meetings. Okay, there are 2 types of meetings for board of directors: board meetings and committee meetings. When it comes to other cases, like you have debenture holders meetings, those are class meetings, preference shareholders meetings, and class meetings. Okay, generally debenture shareholders and preference shareholders, generally they do have meetings in order to discuss if they have any areas of interest on areas of dividend payable to them, and if they are not timely repaid back on the date of redemption. In such cases they will conduct these meetings. Okay, then what are these class meetings, ma'am? Class meetings are like generally when you, in case of equity shares, there are equity shares of different values, like equity shares of 10 rupees, equity shares of 20 rupees, equity shares of 30 rupees, like that. Okay, then only specifically the equity shareholders who purchase the shares of equity shares 10 rupees will come together, and if they conduct the meeting, those are called as class meetings. Okay, generally the voting rights and the rate of dividend for those shareholders will vary, because obviously, if equity shares, so shareholders who have purchased share value of 20 rupees, it means that they're contributing more to the company. Obviously the voting rights will be more and dividends will also be more. Okay, those are called as class meetings. This will fall under this particular clause of other meetings. Okay, now in this particular, for a meeting, for a company meeting, what are the essential elements, what are the essential ingredients required? Okay, in general I will tell. Generally, before calling for a meeting, it is mandatory that the that everybody for calling for a shareholder meeting, you need to intimate them. How the company will intimate to the shareholders and ask them to come for the meeting? The intimation will be done with the help of a notice which is prepared by the board of directors and given by the board of directors to the shareholders, inviting the shareholders for the meeting. Okay, so there is specific provision for issuing the notice, what format and what are the important elements you have to include. There is separate provision for it. Okay, so once the meeting, how it is conducted, where it is conducted, we will mention clearly in the AGM and EGM where and when, what time it should be conducted. Generally meetings will be conducted in other than public holidays, on normal working days, during business hours, like from 9 AM to 6 PM in the evening. Okay, this is the general timings for conducting of the meetings. You all know generally meetings will not be conducted on any public holidays. Okay, the next important, who will conduct the meeting, madam? The chairman, the person who conducts the meeting is called, either it is annual general meeting or extraordinary general meeting or board meeting or class meeting. The person, the authority responsible for conducting the meeting is called as a chairman. So we'll have separate provisions relating to the chairman. Then the decisions will be taken by the shareholders, or in case of shareholders meeting, directors in case of directors meeting. These decisions are termed as resolutions in the Companies Act. Okay, so Companies Act defines the decisions to be taken in the meeting as resolutions. So the decisions taken by the shareholders are categorized into two types of resolutions, that is ordinary resolution and special resolution. The decisions which are taken by the board of directors are categorized as a board decisions. Okay, board resolutions, they are called as board resolution, and we have separate provision for all those things. Okay, fine. This is the general, and in this particular for the meeting, they have to do that voting process no for the purpose of resolution. That voting process is done in generally two different modes. One is through show of hands, the other is through poll. Okay, so one voting process is through show of hands and other voting process is through poll. The poll can be conducted like a normal poll or through postal ballot or through electronic mode, in whatever means possible or whatever means it facilitates. So those all provisions also there are there in this particular thing, in this particular topic of Companies Act. Okay, so these are all general things. Why I'm telling you initially all these points are, these all elements are covered in this particular chapter of general meetings. Okay, all for each and every point there is specific provision. Okay, now you can ask, ma'am, is it necessary that all the shareholders should attend the meeting? Is it mandatory? If they have some personal emergency, do they have to stop that and do they have to attend the meeting? No, there is nothing hard and fast rule that all the shareholders should mandatorily attend the meeting. If they could attend, they will attend, or on their behalf, they can even send the proxies for attending the meeting. Okay. They can attend on their own, otherwise they will send the proxies. Okay, so we have a separate provision relating to the proxy. But in case if a member is a company, if a member is a VIP, like presidents, prime ministers, and celebrities, in such cases, instead of them, if they come to the meeting, there will be a lot of confusion and a lot of crowd of gathering there. Okay, so in order to avoid that, for them, for those celebrities and important politicians, they send another person called as a representative who will represent on behalf of them. Even if the company is a member in another company, on behalf of the company also there will be a representative who will act as a member on behalf of them, and he will have all the rights as a member. Okay, for normal shareholder, there is a proxy, and for VIPs, celebrities, and for companies there is a representatives. So there are separate provision for representatives, separate provision for proxy. Okay, so nice. Okay, everyone gathered there in the meeting. They have conducted the meeting. They have passed the resolution. After that, what the chairman have to do? Chairman have to conclude the meeting, and within 30 days after conclusion of the meeting, he should draft each and everything what all they have discussed, who all have attended the meeting, all the information related to the meeting in a separate book, which is called as minutes of the meeting. Okay, so that will record all the information relating to the meeting, and finally he have to sign that particular minutes book and place it in the registered office of the company. Why we need to place this particular minutes book at the registered office? Because it is helpful for those I mean to say members who could not attend the meeting. If others want to know what all things happened at the meeting, they can read the minutes book. Okay, so with this we will conclude the conducting of the meeting. So in this particular chapter, for what all points I have told you, there is separate set of provision for each and every point, or for each and every provision. Okay, so we need to learn them carefully. Now let us begin this particular chapter with an AGM, annual general meeting. What are the important provisions for annual general meeting? How to conduct this annual general meeting? When to conduct this annual general meeting? Where to conduct this annual general meeting? All these points will be covered in this particular provision section 96 of the Companies Act. Generally, all companies, all public limited companies, private limited companies, government companies, all companies have to conduct annual general meeting except OPC, because OPC, since there is only one member, it is not mandatory for him to conduct an annual general meeting. So for remaining all, it is mandatory for conducting an annual general meeting. Man, where this annual general meeting should be conducted? The annual general meeting should be conducted either at the registered office of the company Company registered office means what I have told you initially. Registered office is nothing but the head office of the company, or it can be connected at any place. If suppose the head office is very small, it cannot accommodate all the shareholders of the company, then in such cases the company can take a lease or take for rent and another venue, a big hall or big conference hall or big grounds for the purpose of conducting a general meeting where the register office is situated. So the annual general meeting will be conducted in the register office of the company, or if that place is not sufficient, they can conduct it any place in the city, town or village where the register office is situated. Okay, so on which day they will conduct this annual general meeting, ma'am? The annual general meeting will be conducted on any working day other than public holidays. Public holidays include Sundays, August 15th, Republic Day. Okay, so all these are considered as a public holiday. What is the time for conducting? During what time they need to conduct this annual general meeting, ma'am? The annual general meeting will be conducted during the business hours, that is from morning 9 to evening 6. Okay, next. Very important. What is the time limit? Within how much time the annual general meeting should be conducted? The first annual general meeting, listen carefully, the first annual general meeting will be conducted within 9 months from the end of the financial year. Okay, it is conducted within 9 months from the end of the financial year. And subsequent AGM, this is mandatory. There is only one time limit which is given for conducting the first AGM of the company after its incorporation, that is within a period of 9 months from the end of the financial year. Okay, and however the subsequent annual general meetings can be conducted in the following of these three. What are those points? What are those things, ma'am? One AGM for the end of the calendar year, an AGM every year end by 31st December, or the gap between the previous AGM should not be more than 15, or within 6 months from the end of the financial year. What are those three categories, ma'am? One AGM by the end of the calendar year, or next one is within 6 months from the end of the financial year, or from the previous meeting the gap should not be more than 15 months. In the least of the three will be considered as a date for the subsequent AGM. And in this particular case, the ROC does not have any right to give an extension time for conducting first AGM. Okay, the ROC does not have the time for conducting the giving an extension time for conducting a first AGM. However, the ROC can give an extension time for conducting subsequent AGM for a period of additional 3 months. Okay, suppose if the company is not ready with the books of accounts, if the company is not ready with few things to be discussed in the annual general meeting, in such cases, it may request the ROC for giving an extension time, and the extension time might be up to 3 months in case of a subsequent AGMs. However, for the first AGM, there is no extension to be given by the ROC. Okay, so this is about the time. I have already told you where the time during the business hours, that is from 9 AM to 6 PM, and it can be conducted in the register office or any other place, city, town or village where the register office is situated. Okay, on a day other than a national holiday. Okay, so and these are the important points. Generally, this particular annual general meeting is mandatory for all types of companies to conduct. However, certain exemption might be given by the central government for few companies which are exempted from conducting the annual general meeting. That will be granted only by the central government. Okay, now next, what are the matters what they will discuss in the annual general meeting, ma'am? Okay, in annual general meeting they will discuss two type of business matters. One is ordinary business matters, next one is special business matters. Okay, so what is ordinary business matter, what are special business matters, we will discuss. Okay, next, suppose if the company fails to conduct annual general meeting, what will happen, ma'am? Okay, if company fails to conduct annual general meeting in the prescribed time, then what will happen? Then tribunal will interfere into this matter, and tribunal will call for the meeting and conduct the meeting. If the company fails to conduct the meeting in time, then the tribunal will levy penalty on the company and it will conduct the meeting. Even one person present in person or proxy, even without quorum, the tribunal will conduct and conclude all the decisions to be discussed in the annual general meeting. Okay, so this is the power of the tribunal. Next, okay, there are a few more other points which I will discuss in this particular annual general meeting. The other points are In this particular annual general meeting, what are the ordinary business matters which are discussed, madam? What are the ordinary business matters in the annual general meeting are, number one, the ordinary business matters are declaration of dividend. First, what they will do in every annual general meeting, they will complete the financial statements, its profit and loss account and balance sheet, and they lay before the AGM. And next, what they will do, they will declare, the board of directors will decide the percentage of dividend, and the shareholders will declare the dividend. Next, if they have need to discuss on these topics also, like for the suppose appointment of non-auditor and fixing the remuneration and appointment of a director, they can also do those things if necessary. Okay, so these four are the ordinary business matters which are discussed in the AGM, and for which ordinary resolution is passed. What resolution is passed here? Ordinary resolution. And other than these, these are called as special business matters. If there is any, then it is not necessary or not mandatory that there should be a special business matter in this particular annual general meeting. The special business matter might be or may not be. Okay, now. So, but for however, compulsorily ordinary business matters are to be discussed in every annual general meeting. Company cannot skip these four ordinary business matters to be discussed, for which ordinary resolution is passed by the shareholders. And further than this, it is called as a special resolution. And here one more point. Before calling for the meeting, the company will issue a notice under section 101 of the Companies Act for the purpose of inviting the shareholders for attending the meeting. Okay. So in this case, the company will issue the notice for the purpose of attending the annual general meeting. Okay. Now, ma'am, is the notice is given only to equity shareholders who are responsible for the purpose of attending the meeting? Is the only equity shareholders are responsible for attending the meeting? No. Generally, equity shareholders will only vote in the annual general meetings. Like preference shareholders, debenture holders does not vote in the annual general meetings. Okay. But the notice is given to everyone. Everyone can come and attend the meeting. That means all the shareholders, like including preference shareholders, to the debenture holders, to the auditors of the company, to all the directors of the company, to the bankers who are related to the company, everybody, the notice will be sent regarding the annual general meeting, and they all should come and attend the meeting. Okay. So these are the provisions relating to the annual general meeting. Next. Extraordinary general meeting under section 100, which is very, 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 very important. Okay, there are what is this extra? Why you are calling as an extraordinary general meeting? Because during the course of business, they generally, for the annual general meeting, we have described the time limit. What is the time limit? Within 6 months from within 9 months for first annual general meeting means 9 months from the end of the financial year, or subsequent annual general meetings means within 6 months or 15 months gap, or by the end of the calendar year. However, in between, before conducting an annual general meeting, if there is some important urgent matter to be discussed by the board along with the shareholders, okay, in such cases, what they have to do, if they can't wait until annual general meeting for the decision to be taken, in such case, in an emergency, as per the requirement, the directors will call for a meeting which is called as an extraordinary general meeting. Okay, which is called as an extraordinary general meeting, where directors will call for this particular meeting. So this extraordinary general meeting will be conducted in the 3 different ways. One, directors, board of directors will conduct the meeting on their own or on the request made by the requisitionist. Second one is requisitionists themselves will conduct the meeting. Third one is tribunal will conduct the meeting. Okay, I will tell you all this. And what are the matters to be discussed in the extraordinary general meeting are generally they are special business matters only. Okay, therefore special resolution is passed in the extraordinary general meeting. What resolution is passed in the extraordinary general meeting? Special resolution. Here one more point I want to tell is, as we all know, in case of ordinary resolution, for ordinary resolutions to be passed, we need to have at least 50% more than 50% of favorable voting in the meeting for the resolution. Okay, if in the meeting more than 50% vote in favor to that resolution, then the resolution will be passed. It will be considered as an ordinary resolution. But in case of special resolution, the votes cast in favor should be more than or equal to 75% of members present in the meeting. If the members present in the meeting among the more than or equal to 75% vote in favor of that resolution, it is called as a special resolution. And here one more point I want is in case of special resolution, if the company is going to pass a special resolution, it is mandatory for the board of directors to give an explanatory statement along with the notice before the meeting. Okay, what is mandatory for the to the board of directors to give an explanatory statement only in case of special resolution or special matters which they are going to discuss in the meeting along with the notice. What is the reason why this particular explanatory statement is important, ma'am? This explanatory statement is important because it ensures that it will ensure the company to explain why that particular meeting is conducted in an urgent matter. So it's important for the equity shareholders to come and attend the meeting and vote for the meeting. Therefore, it is mandatory. However, in case of ordinary resolutions, explanatory statement is not necessary. Okay. In this particular case of extraordinary general meeting, the board of directors, if they think that the particular decision to be discussed with the shareholders important, they'll give a notice before attending the meeting, and they will call for the meeting. Okay, and they pass the resolution. Okay, so this is in a normal process. For the purpose of giving notice, they should give at least 21 clear days notice before the meeting. What is this 21 clear days? I will discuss in section 101 when we are going to talk regarding the topic of notice. Okay. Next, if meeting is requested by the requisitionist to the board for conducting a meeting. What is a requisitionist? Requisitionists are nothing but certain group of members in an organization. Okay, there are nothing but a specific group of persons only among the equity shareholders. What they think that there is certain urgent matter which is to be discussed in the meeting, and for which the decision have to be made. In such case, those requisitionists, the members who are making request are called as the requisitionists. Who are called as requisitionists? The members who are making the request to the board of directors for conducting the meeting are called as requisitionists. Okay, these this requisition or request will be made by the members asking the board to conduct the meeting. In such, and they will make a request in a paper on a written document, and they will sign it, and they will deposit at the registered office of the company. Later, this request will be read by the board of directors, and they will call for the meeting and conduct the meeting. Okay, so this is second option. Third one, even after making repeated requests also, if the board is not responding, nor if the board is conducting the meeting, in such cases, the requisitionists will themselves call for the meeting and conduct the meeting within a period of 3 months from the date on which they have deposited the requisition letter at the registered office of the company. Okay, so in this particular case, how many members make requests, then the board will respond to conduct the meeting. Here, how many requisitionists to make a request? Here, in this particular case, members who are holding not less than 1/10 of the paid-up share capital, or members who are having not less than 1/10 of the voting power, who should make the requisition. How many members should make the requisition? In case of company having share capital, members having holding not less than 1/10 of the paid-up share capital, or in case of companies having voting power, in that particular case, members holding at least 1/10 of the total voting power. If those members make a request to the board to conduct an EGM, the EGM will be conducted by the board. If even after repeated reminders, also if the board is not if the board is not responding nor conducting the meeting, in such case, requisitionists themselves will call for the meeting and conduct at the registered office of the company within a period of 3 months from the date on which they have deposited the request letter at the registered office of the company. Okay, so this generally EGM can be conducted at any place in India. Okay, in all the above cases, EGM can be conducted at any place in India. But however, in this particular case, where the requisitionists are calling for the meeting on their own, the EGM should be conducted at the registered office or any place where the registered office of the company is situated. Okay. Next, for certain decisions where the board is not calling for the meeting, where the requisitions did not call for the meeting, and if tribunal thinks that it is necessary for that particular company to conduct the meeting and take a decision, in such case, the tribunal by itself on its own or on any application made by the member of the company will call for the meeting and conduct the meeting. Even though one person present in person or proxy or without any quorum, the tribunal will call and conduct for the meeting. Okay, so these are the important important points which you have. Since in this extraordinary general meeting, whatever resolution we take is a special resolution, so explanatory statement is mandatory. But however, in case of an extraordinary general meeting, when the meeting is called by the requisitionists themselves, in such cases, the meeting would be valid even though explanatory statement is not attached to the notice, because it's a duty. Remember, this this point is very important for the practical area or practical question. Only it is an important for the board of directors to give an explanatory statement along with the notice, but it's not the duty of the members to give an explanatory statement. Since the board did not respond properly, nor the board did not conduct the meeting properly, therefore requisitionists themselves called for the meeting. In such case, even though explanatory statement is not there, the notice is valid as well as the meeting is also valid. Okay, so in this particular case, there's one more bit point. So when the meeting, in case of EGM, is conducted by the requisitionists themselves, the expenses relating to the meeting should be later reimbursed by the board of directors, who have to reimburse the expenses which are cost to this particular I mean to say the shareholders of the company. Then the expenses should be reimbursed by the board of directors. Okay, so these are the very important points relating to the extraordinary general meeting. Okay, and I have already told the time limit. The first, generally board will conduct an EGM on its own motion by giving 21 clear days notice. In the second case, the board, on the request made by the requisition, the board will conduct in the period of 45 days from the date of requisition made. In the third case, when the requisitions themselves conduct, they will conduct within a period of 3 months from the day on which they have deposited the requisition to the board of directors at the registered office. Okay, so all these points we have discussed just now, and by the tribunal. Okay, now as I have already told you, who are responsible for calling for the meeting? Generally, AGM or EGM will be called by giving a notice to the shareholders. Notice will be sent to all the shareholders for asking them to attend the meeting. Who are responsible for this is only board of directors are responsible for calling, for preparing the notice and calling for the notice. They cannot delegate this power to managing director, secretary, or any other director of the company. In such case, notice would become void and also meeting would become void. Therefore, it is mandatory both in case of AGM and EGM for the board of directors to call for the meeting. Okay, so the next important is section 101 notice. How this notice will be given, and what are the contents of the notice, and what is the time limit, and what is 21 clear days. We will see in this particular topic of notice. Okay, as I have already mentioned you, that notice is given for the AGM in EGM by the board of directors. They can't delegate this power at least 21 clear days before the meeting. The notice will be sent by written form through post or electronic post or through the registered address of the members. Or they will also send through electronic mode. Or if specific member is asking to send the notice through an acknowledgement due, in such cases that expenditure for that particular registered post should be deposited by the member. Then company will give that notice to that member as required by him. Okay, now for the purpose of notice to reach to the member, it takes a minimum of 2 days, that is 48 hours from the date of posting the letter and for the date of that particular letter to be reached to the member. Okay, now here, what is 21 clear days, ma'am? While calculating the clear days, 21 clear days, you should not count the day on which the letter is posted and the date of the meeting. Okay, what you should not count the day on which the letter is posted, the day of meeting. The gap between them should be 21 clear days, and you should also take away 2 days for the purpose of the letter which have to be reached by post. Okay, so you should also reduce that particular 48 hours, that is 2 days. Total, it means that 24 days. In 24 days, if you reduce this particular 2 days for the travel of the letter or for the posting of the letter, and 1 day for the day of posting and 1 day for the day of meeting, that then you will get the 21 clear days. Especially, you should be very careful while calculating this 21 clear days between the day of meeting and day of posting. Okay. However, in case of section 8 companies, for section 8 companies, you need not satisfy this 21 clear days. Instead of that, 21, it is sufficient if you send at least 14 days before the meeting in case of Section 8 companies. Okay. However, it is mandatory for the company to send the notice to all the shareholders of the equity shareholders of the company. If the company by mistake accidentally, if it omits to give the notice to few of the shareholders, it does not invalidate the proceedings. Okay, it does not make the meeting invalid if accidental omission. If intentional omission means obviously the meeting would become invalid. Okay, as I have already told you, who are entitled to receive the notice? Every member of the company is entitled to receive the notice. The his legal representatives in case of his death, or official assigns, auditors, and every other director of the company will receive the notice. Okay, next one. What are the contents of the notice? Only the notice will contain on the full name, address of the registered office, the place, time, venue, when the meeting would be conducted, and what are the matters which we are going to discuss in the meeting. And if the member could not attend the meeting, they can also send their proxies on behalf of them. So they will also ensure that along with the notice, a proxy form is also given to the members of the company. Okay, so in case of special business matters, or in case of special resolution to be passed, it is mandatory for the company or the board of directors to give an explanatory statement along with the notice. Okay, so these are the very important points relating to the notice. Now you can ask, ma'am, for suppose if the company could not have this 21 clear days time, and the company want to issue a shorter notice, in that case also can a company give a shorter notice, ma'am? Yes, the company can give a shorter notice. In that particular case, if company want to give a shorter notice, company should take the approval of members present in the meeting. How much percentage the approval should the company have to take, ma'am? In this particular case, members who are present in the meeting should give their consent either during the meeting, before the meeting, or after the meeting. At least 95% of members present, that is minimum 95% or more, should give their consent in writing that we accept for the shorter notice, either before the meeting or during the meeting or after the meeting. Here one more very important point I want to say. Here at the time of passing a resolution, or in the for the percentage of calculation on shorter notice, you should consider only the members who are present in the meeting. You should not consider this percentage. You should not calculate this percentage on total number of members. Understood? When you are calculating this percentage, you should calculate this percentage only on number of members. Suppose, for example, total number of equity shareholders for the company are 2,000. But only members came on that particular day to the meeting are 1,000. This 95% calculation you should consider only on that particular number of members who are present, who came to the meeting. You should not consider on that particular total 2,000. In the same way, when you are passing ordinary resolution and special resolution, you should count only that percentage on the members who are present in the meeting. This is a very important thing which you need to remember. Okay, you should not count on out of the total number of members present. You should count only on number of members present in the meeting. Okay, now next one. I have already told you about this particular ordinary business matters. Ordinary business matters, it is mandatory for the company to discuss the ordinary business matters in the annual general meeting. Okay, so it is compulsory for the company to discuss the ordinary business matters. What are the ordinary business matters, ma'am? Considering the financial statements, declaration of dividend, appointment of directors in place of retiring directors, and appointment of auditors, and fixing their remuneration. These are the ordinary business matters. Special business matter might be there or might not be there. Okay, so without ordinary business matters, there is no AGM. Okay, under section 102 of the Companies Act, ordinary and special. And for special business matters, you need to give an explanatory statement along with the notice, which I have already told you regarding the explanatory statement under 102. What will happen if the board of directors forget to give the explanatory statement along with the notice for any extraordinary general meetings or annual general meetings where the special business matters have to be discussed? In such cases, the meeting would be cancelled because the notice would become invalid and meeting also would be cancelled. Okay, next, very important concept is okay. The next important point is regarding the quorum under section 103 of the Companies Act. Okay. What is this quorum, madam? Why it is important? It's a very, very, very important provision under Companies Act for you, especially in the general meetings topic, either from the provisional perspective as well as from the theoretical and practical view. This quorum is very, very important. Now, under section 103, quorum is nothing but, for a common person to understand, quorum is nothing but minimum number of members present in the meeting. What is quorum? Minimum number of members who will be present in the meeting, without which the meeting will not be conducted, or without which the meeting will not start. Okay. So, for example, if as a lecturer or as a teacher, if I have a rule that if minimum, once I start the class, if minimum these many students are present in my class within this particular specified time, then I will continue the class. Otherwise, I will not continue the class. Like this is the same way what Companies Act is saying. For the meeting to be conducted or for the meeting to be continued, the minimum number of members should present in the quorum within a time of 30 minutes from the starting of the meeting. And this minimum number is required within 30 minutes of starting of the meeting. Okay. So what is this? Who are considered for the purpose of quorum, ma'am? Okay. Now, how many members have to be present? The Companies Act has given a specified limit in case members who and it is sufficient for the purpose of counting quorum, 5 members who are personally present within a time of 30 minutes from the starting of the meeting, then it is valid quorum. In case of a public limited company where it is having more than 1,000 members but up to 5,000 members, then 15 members should company are more than 5,000. In such cases, therefore the members who have to personally present for the meeting are 30. Okay, so 30 members should personally present for the meeting. Then only the meeting within a period of 30 minutes from the day of from the time of starting the meeting. Okay, then only the meeting would continue and the decision should take place. Ma'am, what will happen if the quorum is not present within a period of 30 minutes? Then meeting would be adjourned. What will happen? The meeting would be adjourned. But except in case when the meeting is called by the requisitionists themselves, in case of an EGM, the third case, when the requisitionists themselves call for the meeting, if the board does not respond for conducting the meeting, if the quorum is not present within the prescribed time, then meeting would be cancelled. This is very important for a bit. In any other case, the meeting would be adjourned. But however, in case of a private company, it is sufficient for 2 members personally present in the meeting. For how many members it would be sufficient to present in the meeting? 2 members it is sufficient for them to personally present in the meeting. Okay. Now, who all are counted for the quorum? Here, very, very important point. The proxies who will come on behalf of the shareholders are not counted for the purpose of quorum. Okay, who are not counted for the purpose of quorum? The proxies are not counted. Only members are counted for the quorum. Proxies are not counted. But however, in case of a body corporate or in case of a president or a governor, representatives of them are counted. Because the representative will act as a member, they are counted. Representative of body corporate, representative of president and governor are counted for the purpose of quorum. And these members who are personally present and counted for the quorum should be present throughout the meeting. They should continue throughout the meeting. Okay, until the meeting is completed. But however, in some cases, in some meetings, even without the quorum also the meetings are valid. As I have already mentioned you, in case of a tribunal calling for AGM or tribunal calling for the EGM, even one member present in person or proxy, or if there is no quorum also, such meetings are valid. Okay. Or however, in case of a private company where there are 2 directors, and all the majority of shares are held by them, it is sufficient if they, in that particular case, one director is absent, in the remaining 1% or one member, there is only 2 members, and if one member is absent, the other member who comes for the meeting, then it is valid. Okay, even though in the absence of the quorum. So if there is no quorum when the tribunal call for the meeting, if there is no quorum in case of an EGM or EGM and tribunal call for the meeting, such meetings are valid. Okay, now you can ask, ma'am, suppose if the meeting is adjourned, even in the adjourned meeting also, if there is no quorum, You said if the meeting is not, if there is no quorum in a meeting, the meeting would be adjourned for the next day, same place, date and time. In the adjourned meeting also, if there is no quorum, what they will do, then they will conclude the meeting and they will pass the resolution with whoever present in the meeting, and there is no more cancellations. Okay, whoever present in the meeting, they will conduct the meeting and they will pass the resolutions. Okay, so these are very, very important points relating to the quorum. Okay, remember. Next, chairman under section 104. Who is this particular chairman? I have already initially told you. Once the meeting is started, the proper authority to call for the meeting is the chairman. This chairman will conduct the meeting. How this particular chairman is appointed? Initially, what they will do, the directors among themselves will elect one person to act as a chairman for conducting the meeting. Here, one more point I want to tell you is, in this particular case, the meeting can be conducted either by show of hands or through poll. The decision will be taken, the decision would take place in the meeting either by show of hands or through poll. If the meeting is started and the resolutions are passed through show of hands, and if some of the members are not happy with the result by show of hands, if they request the chairman to conduct a poll, then the chairman will immediately take an action to conduct the poll, even though the resolution is passed by the show of hands. Okay, so it is a duty of the chairman to immediately take responsibility of conducting the poll. Once the decision is taken by the poll, that would be the final, and it would replace the decision of the decision which is taken by show of hands. And here the chairman is having an additional extra vote, especially when in the case of ordinary resolutions, when there is equality of votes. In case of ordinary resolution, when 50% are voted in favor and 50% have voted against, then it will be difficult for the chairman to pass a resolution. In such cases, only in case of ordinary resolution for ordinary business matters, chairman will be given extra one vote. Okay. Now, this particular chairman is also responsible for drafting the minutes once the meeting is over within a period of 30 days. It is important for him to draft the minutes and sign the minutes and keep in the registered office of the company. Okay, so these are the points. So we have seen what is notice under 101, quorum under 102. We have seen even particular chairman under section 104. Next, very, very, very important provision is proxy. Who is proxy? What's the importance of proxy and why he is very, very important for a company? Okay. Generally, as I have already told you, it is not mandatory for all the equity shareholders to attend the meeting, because on the day of the meeting, they would have some other personal emergencies, right? In such cases, the member can attend the meeting and vote with the help of a proxy. Therefore, what the company will also do, company will also give an intimation in their notice asking that either member can attend in person to the meeting or they can send their proxies. Okay, so therefore the equity shareholders can attend the meeting even through proxies. But in this particular case of proxy, the proxy have few limitations. Proxy cannot vote in the meeting through show of hands. How the proxy cannot vote? Proxy cannot vote through show of hands. Proxy can vote by poll or by any other means, but he cannot vote through show of hands. And there should also be provision in the company's articles that allowing the members of the company to appoint proxies. But however, in case of section 8 companies, the companies which are registered in section 8 companies, members can appoint proxies, then this proxy should also be another member of the company. Okay, but however, in any other case, the proxy need not be a member of the company. You can ask, ma'am, the proxy should mandatorily be the member of the company? No, not necessary, but only in case of section 8 companies. Only in case of section 8 companies, proxy should be another member, also should be a member of that particular company. Okay, only members are allowed to act as a proxy in section 8 companies. Okay, here another important limitation: a person can be appointed a proxy and act on behalf of a member or number of members not exceeding 50. For one person can act as a proxy for a maximum number of 50 members. However, their shareholding should not be more total. Their in aggregate should not be more than 10% of total share capital of the company. It's a very, very important point. Once again, I'm telling you this particular limitation. A person can be appointed as a proxy for not more than 50 members. Okay, and the total aggregate shareholding should not increase 10% of the total share capital of the company. Otherwise, if one member is holding 10% or more of the paid-up share capital of the company. In such cases, this one proxy can act as a proxy only to that member, one member. He cannot act as a proxy to any other member. Okay, this is very, very important. Once again, I'll tell you, a proxy can act as a proxy for a maximum of 50 members. Okay, however, the shareholding should not increase the 10% of the total share capital. Or if one particular single member is holding more than 10% of the total share capital. Okay, in such cases, a proxy can act only as a proxy for that particular shareholder, okay, or a member of the company. Now, next, I have already this particular point I told you, he can vote only by poll, by not by show of hands. And this particular proxy form should be deposited by the member at least 48 hours before the meeting. How many hours he have to, before the meeting, he need to deposit the particular proxy form? At least 48 hours. However, the company should not increase the time limit by mentioning in the AWOL. Company should not demand or force the member to deposit the proxy form 72 hours before the meeting or 56 hours before the meeting. If you want, he can do. Since it's a voluntary act, he can do either 72 hours or 50. There is no mandatory hard and fast rule. But within how many hours it would be sufficient if he deposit the proxy form within a period of 48 hours before the meeting, it is sufficient for the shareholder to deposit the proxy form after filling all the necessary details and signing this particular proxy form. Okay, understood. So these are the important points. And proxies cannot speak in the meeting and is not counted for the quorum, and he cannot vote by show of hands. These three things the proxy can't do. What he can't do? He cannot vote by show of hands. He cannot speak in the meeting. He is not counted for the purpose of quorum. Okay, so these are the important points relating to the proxy. Next. This proxy thing under 105 is also applicable to a private company. Next, very, very important point is inspection of proxy. Okay, if a member want to know that whether his proxy is properly attended in the meeting or properly voting in the meeting, he can inspect this particular proxy. If for the purpose of inspection, he should give at least 3 days prior notice to the company. For the purpose of inspection of this particular proxy form and proxy, the company have the shareholder or the member have to give at least 3 days prior notice in writing for the inspection. Then the company will allow for inspection at least from 24 hours before the meeting till the end of the meeting. This is very, very important from the practical perspective. Once again, I'm telling, yes, the member or the shareholder can inspect the proxy. For the purpose of inspection of proxy, he should give at least 3 days prior notice to the company before the meeting. And the company will allow for inspection 24 hours before the meeting till the end of the meeting. Okay, so this is very, very, very important point. Now you can ask, ma'am, if the member have appointed proxy and before proxy votes, if member personally presents to the meeting, since his work have been cancelled, in such cases proxy would be revoked and member can attend the meeting and vote in the meeting. Okay, so the revocation of proxy takes place when member himself personally attends the meeting. Okay, so these all are very, 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 very important, and all the expenses relating to the proxy should be borne by member himself, not by the company. Company will not bear the expenditures relating to the proxy. It is a member who need to bear the expenditures relating to the proxy. Otherwise, the company and its officers are in default, and they will be liable for penalties if they bear such expenses. So this is under section 105 of the Companies Act regarding 6 to 109. So I have already told you voting is by show of hands or through demanding poll. And however, in certain cases, the company will restrict the voting rights for the equity shareholder. Generally, equity shareholders only have the power to vote in the meeting. But however, in the following cases, the equity shareholders are restricted from their voting rights. What are those cases? Number 1, if the shareholder fails to pay the call money, even after repeated reminders of the company, if the shareholder fails to pay the call money even after repeated reminders by the company, in such cases, the company will restrict the voting right of that particular shareholder, or where his shares are under lien exercised by the company. In such cases also, or when there are areas of call money, in such cases, the voting rights of the shareholders are restricted by the company. Okay, so first initially the voting takes place by show of hands, and later on, if the members of the company are not satisfied with the decision taken by show of hands, then they request the chairman for conducting the meeting through poll. Then the chairman will pass the resolution through poll, and the decision taken by poll would be final. Okay, now here one more point you can ask, ma'am, in case of if a member is an insolvent person, in such cases, if the member is insolvent, then whether he can vote in the meeting or not. Here, what the Companies Act is saying is, in case of his insolvency, until his name appears in the register of members as member, he can attend the meeting. Okay, for any member, until their name appears in the register of members, they can go and vote in the meeting, especially even in case of transfer of shares also. Once the name is removed from the register of members and he is no more the member of the company, from that particular case, he will be ceased to vote in the meeting. Okay, so these are the important points relating to voting rights. Next important is demand for poll. How many? I have already told you, the voting by show of hands and demand for poll. If the members demand for poll, how many percentage of members should demand for poll? Then only the chairman will accept for conducting the meeting through poll. Chairman can conduct this particular poll on his own motion or on the request of the members. In this particular case, members who are present members present in person or by proxy, holding at least 10% of voting power, or their paid up share capital is 5 lakhs or more. In such cases, those members can, if they make a request to the chairman, then the chairman will conduct the voting by demand on poll. Okay, in any other case where the company is not having share capital, then members holding at least 1/10 of the voting power, total voting power, can demand for poll. So even though the poll have been demanded by these members, if they think that if they accept or if they respect the decision taken by the show of hands, then they may withdraw their demand for conducting the poll. Okay, so these are the important points relating to conducting of meeting through poll by the chairman of the company. The chairman only is responsible for passing a resolution through poll once it is requested by the by the shareholders, okay, or by the equity shareholders of the company. And voting through electronic mode, there are a few important provisions relating to voting through electronic mode, because if the company is having a huge public listed company having a huge number of members, then there is a specific process for conducting voting through poll. And there is in some cases when the company asks for conducting the resolution through postal ballot, then it is mandatory for the company to send these particular forms to all the shareholders who are registered address are mentioned in the register of the company for conducting the resolution or passing the resolution through postal ballot by sending the notices to registered post or speed post or through electronic modes or by the courier. Okay, or also giving an advertisement in the newspaper. Okay, so this is about the postal ballot. And these are the following resolutions where you need to pass through postal ballot: buyback of equity shares, variation in the rights of attached to the class of shares, issue of shares, equity shares with differential voting rights, change in the place of registered office outside the local limits of city, town, or village, altering the objective clause of memorandum, and alteration of the articles of association, sale of the whole or substantial whole undertaking of the company under Section 180, giving loans or giving guarantee in excess of limits prescribed under Section 3 or subsection 186, election of the director under Section 151. In these following cases, the company have to pass the resolution through postal ballot. I will tell you one very, very important point regarding why the company will insist on passing a resolution through postal ballot or through electronic mode. I will tell you. See, generally there will be so many shareholders for a public listed company which is having a huge capital and doing big business. And it is very difficult for the shareholders to come to the registered office or to come to the place where the registered office of the company is situated and to come there and attend for the meeting and vote for the meeting. It would be very difficult, Therefore, in order to facilitate, in order to encourage all the shareholders to vote, then it is better that if they are in their own places, there is no cost of travel, no cost of providing accommodation for those shareholders. They can nicely, happily sit at their home or in their office and they can vote just by by breaking a paper, giving their decision or solution to that particular paper and posting it to the company. So in that way, the company can get the replies or the decision of all the shareholders of the company if they pass the resolution through postal ballot or electronic means, and the decision whatever they have passed would be a fair decision. Okay, so this is the importance why the company would pass the resolution either through postal ballot or through electronic mode. Okay, now next, circulation of members resolution before passing a resolution under 111, and this is nothing but 113's appointment of representatives. I have already told you, generally for a normal person or normal member of a company, proxies are appointed on behalf of them for attending the meeting in their absence. And in case of presidents and governors or VIPs or celebrities who can't come to the meeting personally, in such cases they will appoint a representative. And even in case of body corporate, one person can act as a representative for more than one company. For example, Mr. X is acting as a representative for AB Limited, PQ Limited, CQ Limited. Then he is counted as each one for each case. Therefore, there will be 3 in that particular case when he's acting as a member for the 3 companies. Okay, so this is nothing but appointment of representatives under section 113 of the Companies Act. Resolutions. What is ordinary resolution? What is a special resolution? In this, as I have already told you, special resolution. In case of special resolution, the votes in cast favor should be at least more than or equal to 75% of total voting. And in another provision also there, votes cast in favor should be 3 times more than votes cast against. Both are same. Okay. Here another point under 116 is, suppose if the meeting could not be conducted because of some few reasons and the meeting is adjourned. In case of an adjourned meeting, ma'am, the date of passing the resolution, we will take the date on which the adjourned meeting is conducted or the previous date the meeting ought to have been conducted. Here what the Companies Act is saying is, the day on which you have resolution is passed, that is the day of adjourned meeting, the same day you should consider as a day of passing the resolution, but not any previous days or earlier days. Okay, so the last very important provision under this particular topic of general meetings is minutes under 118 of the Companies Act. Okay, so this is the last important provision under Companies Act. Okay, what are the minutes of the meeting? I have initially told you, minutes is nothing but it contains the information or details what the company have discussed in their annual general meeting or external general meeting or any other meeting. Minutes is prepared by the chairman within 30 days after the conclusion of meeting. Okay, minutes will contain the information relating to meetings, what all proceedings have taken place in the meetings, who have attended the meeting, who are absent from the meeting, what are discussions happened, what resolutions are passed in the meeting. All these details will be appearing in the minutes book. This particular minutes book is prepared by the chairman at the end of after completion of the meeting within a period of 30 days, and there are and he will sign on each and every page, and it will be properly numbered, and the chairman will write all the next true information to the best of his knowledge in the true and fair means. If he thinks that any information which is detrimental to the interest of the company and which is irrelevant, immaterial, and which is not reasonable, defamatory of any person, in such case chairman will avoid those information to be written in the minutes book. Suppose for example, if in a meeting, if 2 members fought with each other, 2 members spoke something bad about the company or bad about the directors, the chairman need not include all those informations. It is up to his will whether to include or not. So he can avoid such information which is irrelevant and immaterial to be written in the minutes book, and nobody can question, the shareholders or other members cannot question why the chairman have not included those matters in the minutes book, because it is completely to the discretion of the chairman. The chairman will draft in such a way that because since the minutes is a public document which is kept in the registered office of the company for the inspection of the members and outsiders, he will write the information to the best of his knowledge, to the true and fair means, and in order to maintain the goodwill of the company, and information which is irrelevant, immaterial, detrimental, all those information will be avoided by the chairman. Okay, and who will sign this particular minutes book, ma'am? The chairman, in case of a board meeting, the chairman of that particular board meeting, if he's present, if he's not present, if he went to out of station or if he died during the immediately after the meeting, in such cases, the chairman of succeeding board meeting will sign the minutes book. However, in case of general meetings, if the chairman of that particular general meeting at the end of the meeting will prepare the minutes books and sign the minutes book. If he is not present, if this particular chairman is not present, then who will sign the minutes book, ma'am? If he was dead, if he went to out of country after the meeting, and if he was incapable, in such cases, the directors among themselves will appoint one person to act to sign as a chairman of that particular meeting. In that particular case, who will say? Directors among themselves will appoint one person to sign for that particular meeting. Okay, this is only in case of general meetings other than board meetings. Okay, with this we concluded this topic of minutes of the meeting. So in this topic of general meeting, we have seen these all very important topics. We covered about AGM, EGM, notice for the meeting, ordinary resolution, special resolutions. We have covered quorum. We have covered proxies, the chairman, representatives, about the representatives, and about the voting rights and voting by poll, voting through postal ballot. And we also cover this point of minutes, which is very, very important under company side general meetings topic. Okay, there are many. You can see that there in these provisions can be asked either in practical way or through bits or through direct theoretical questions. So very important topics of this particular general meeting. So with this, I'll stop general meeting, and next we are going to start another topic called dividends, which is remaining in this today's class. Okay, next we are going to cover the topic of dividends. Just a minute. Okay, so the next important topic in today's session is dividends. Okay, what are dividends, when the company will issue these dividends, and for whom these dividends are given, and what percentage the company have to give the dividend. We will see all these important topics like declaration of dividends, interim dividends, unpaid dividends, investor education protection fund, and effect of the transfer of pending registrations. All these things we will see in this particular topic of dividends. Okay. Generally, every company, when it accepts shares from outside public, when it's having share capital, it is important for them to give the dividends in order to satisfy the investors of the company. Okay, dividend is nothing but distribution of divisible profits of the company among its members. What are dividends? It is nothing but distribution of divisible profits of the company among its members according to the number of shares held by them and the paid up value of the shares. This dividend can be distributed in two ways. One in form of cash dividends and other in form of bonus dividends. What are these cash dividends, ma'am? Cash dividends means once the company have declared the dividend, they will give in form of either cash or check or warrant to the member whosever name appears in the register of members. And what are these bonus dividends? Sometimes if the company is getting surplus profits where they don't want to distribute entire profits to the shareholders. In such cases, they will give certain percentage as cash dividend and certain percentage of profits they will capitalize and they will give in form of bonus shares for their fully paid up shares. So in that way, they would satisfy their shareholders and the investors by giving these cash dividends and bonus dividends. Okay. Now, next important point. Man, this particular dividend, where who will decide about the dividend? Giving dividend in case of, especially in case of preference dividend, it is mandatory for the company, and the company have to give fixed rate of dividend for preference shareholders. But when it comes to the equity shareholders, it is not mandatory for the company to give equity dividend on equity shares. Whenever the company is having profits, then only the company will declare the dividends. Therefore, it is not at all right of the shareholder to claim for the dividend. It becomes right to the shareholder only when it is declared by the board in the annual general meeting that they are thinking of giving the dividend. Only once the declaration happen in the general meeting, then it would become the right of the shareholder. What initially happened in this particular case, in case of declaration of dividend, first the board of directors will conduct a board meeting and they will sit together and they will decide on their financial aspects of the company. If they in that particular current year the company is having good profits, after meeting all the necessary expenses like depreciation, current year losses or previous year losses, then they will decide on certain percentage to give as a dividend to the shareholders. That percentage they'll keep in mind. Either it might be up to 10% or up to 15%. Then once the annual general meeting is conducted, then the one of the director will make a proposal to the shareholders saying that the company is planning to give a dividend up to 10%. Now you all sit together and decide what is the final percentage for the payment of dividend. What the director would say, they would give a limit of that particular percentage of dividend. Now shareholders will decide whether it should be 8%, 6%, 7%, or 10%. Okay, it will be decided by the shareholders. But whatever the percentage decided by the shareholders should not be more than the percentage given by the board of the directors. The percentage given by the board of directors is maximum. It should not increase. The shareholders should not increase the percentage, okay, which is declared by the board. Once the shareholders decided by passing an ordinary resolution, the board of directors should not cancel this particular resolution, and it becomes mandatory on the board to give this particular percentage of dividends as dividend within a period of 30 days from the date of declaration in the AGM. Within how many days the dividend should be paid to the shareholders? Within a period of 30 days. Okay, so these are the very, very, very important points. Now, from where this dividends would be paid, ma'am? Dividends in any financial year are paid out of the current year profits, or after providing depreciation, current losses, or out of the profits of the previous years after providing for depreciation, or out of monies which are provided by central government and state government. The dividends can be declared by the company. But however, before declaring the dividend out of profits, what the company can do, the company first initially will adjust off its current year losses and depreciation. Then after that, the company, if it wants, there is no mandatory rule or provision. The company, if it wants, it will transfer certain percentage of its profits to a reserve account, to a separate reserve account. It can transfer, and after transferring only, the remaining profits can be declared as a dividend. Okay, so before declaration of any dividend financial year, certain percentage of profits would be transferred to the reserve as savings by the company. It is at completely at company's discretion. There's no any fixed percentage. Okay, and dividends will be paid only after adjusting the losses and unabsorbed depreciation by the company. Okay, and this, once the company declares in the AGM, once the company declares that company is going to pay the dividend, and after decision taken by the shareholders, what the company have to do, within 5 days, company should transfer that particular dividend amount to a separate account in a scheduled bank of the company. Okay, they should immediately transfer this. But suppose 8% of the profits are to be paid as dividend, that amount should be transferred immediately after declaration in the general meeting of the company. Okay, then afterwards the company will pay this dividend either in cash form or through check or through electronic mode to the shareholders. If company fails to make any repayment of statutory dues or repayment of deposits and interest, in such cases, the company cannot declare dividend or pay dividend until it make those defaults good. Okay, until it make those defaults good, the company cannot declare dividend or pay dividend to the equity shareholders. Now, the dividend here is of two types: interim dividend and final dividend. Dividend also includes interim dividend. Interim dividend is a dividend which is paid between the two AGMs or within a financial year after completion of 1 or 2 quarters. The interim dividend, if the company thinks that in between the financial year, if the company is getting huge profits, then here in this particular case, the board of themselves will decide the rate of percentage and declare the dividend. Here, while giving the interim dividend, the board need not consult the shareholders nor take their approval by passing a resolution. For giving interim dividend, the board will need not take the approval of the shareholders, nor they need not pass any resolutions or any declarations in the AGM. The board will decide in the board meeting for the purpose of paying the interim dividend. The dividend paid by the board of directors is final. Okay, it is also part of final dividend. Suppose if the company is not having any profits until the previous quarter, before the quarter where the company wants to declare the dividend, in such cases, the rate of dividend the company will declare should not exceed average rate of dividend in the preceding 3 years. In this particular case also, interim dividend can be paid out of current profits or out of previous accumulated profits. The company can pay its interim dividend. There is difference between final dividend and interim dividend. In case of interim dividend, the shareholders' permission is not necessary. The board of directors' permission is sufficient. Here, now next very, very important point. Ma'am, once after declaring dividend, the company have to pay within 30 days to all the addresses or all the details given by the shareholders should transfer the amount. For suppose, in case of few shareholders, company could not transfer the dividend because the company could not get their correct address or correct account number for the purpose of transferring the amount. Then what the company have to do? Then within the expiry of 30 days, from then within a period of 7 days, company should transfer that unpaid dividend amount. Okay, what the company should transfer? Company should transfer the unpaid dividend amount to a separate account maintained by the company, which is called as unpaid dividend account. Okay, see the company, what it will do once the company declares the dividend in the AGM, the amount they will transfer into separate account. From that particular account, they will pay the dividends within a period of 30 days from the date it is declared. And for suppose if the company could not make payment to few shareholders whose name is not properly given or account details are not properly given and they did not claim the amount, in such cases what the company should do? Company should not misuse this particular amount. Immediately after completion of 30 days, company should transfer the amount to a separate account which is to be maintained by the company, which is called unpaid dividend account. And after transferring to that account, the company within a period of 90 days, it should write all the details of the shareholders who have to claim this particular amount or for whom the company have to make payment or whose payments are due. Those details and addresses and account details and phone numbers, everything the company will draft and it should place in the website of the company within how many days? Within 90 days. And after once it is placed in the website, then the shareholders, whoever will see that and for whom the payments are due, can make an request or can make an application to the company requesting the money. Then from that unpaid dividend account, the company will make payment to those shareholders who all make the request. Okay. Even after transferring to that unpaid dividend account, if the amount is still unclaimable for a period of 7 years, how many years they will maintain that amount in that particular account? For a period of 7 years. Even after 7 years, the particular amount is unclaimed by the shareholders, then company should not misutilize nor utilize for the purpose of their business. They should transfer this amount to a separate fund maintained by the central government, which is called as an Investor Education Protection Fund. Where they should transfer this particular amount? To Investor Education Protection Fund. If they did not transfer the amount to this Investor Education Protection Fund and if they have used for their own purpose, in such cases the companies and its officers are liable for penalty, and that amount they will transfer it to Investor Education Protection Fund, which is maintained by the central government. The central government will utilize this particular amount which is transferred by the companies to the Investor Education Protection Fund for the benefit of the investors by giving advertisement, by solving their issues in the court, and for all those purposes they can utilize. And here you can ask one more question, ma'am. First, suppose if the shareholder came to know that his amount, after the amount is being transferred to Investor Education Protection Fund, can he claim from the central government regarding his due? Yes, the option is given to the shareholder. Even though the amount after 7 years have been transferred to Investor Education Protection Fund, still he have an opportunity to apply to the central government and claim his fund. But it's time taking, but still that option is open for him. An option is available for him. Okay, so this is all about Investor Education Protection Fund. Now, next very, very important point which you have to understand is in this particular case, if as I have already told you, the dividends are to be paid out of the current profits of the company. Then the company need not, the board of directors need not follow any provisions or rules regarding deciding the rate of dividend. But if the company is paying dividend out of previous accumulated profits or previous accumulated reserves, in such cases, like it is mandatory for the company to follow certain rules given under Companies Act. What are those rules, madam? Number one, the rate of dividend should be not more than average rate of preceding 3 years. What is the rate of dividend the board of directors should decide? Not more than average rate of preceding 3 financial years. And the amount which they are utilizing from the reserves, they should not draw more than 10% of the paid up share capital and free reserves of the company. And after withdrawing the amount from the paid up share capital and free reserves, they should adjust with all the current losses and depreciation. And the balance that they should, minimum balance they should maintain in the reserves should not be less than 15% of paid up share capital and free reserves. Minimum balance should not be less than, after withdrawal, 15% of paid up share capital and free reserves. Okay, so these are the very important points to be remembered. This provision is important only when the company is utilizing the reserves for the purpose of payment of dividends. If company is utilizing current profits, both in case of interim dividend and final dividend, this particular provision is not applicable. Okay. Next important point under section 126. Ma'am, okay, fine. You have told all these things. For suppose if when the time of payment of dividend is the shares are being transferred or the shares are transmitted, in such case there is a pending registration, then for whom the company have to pay dividend, in such case what the company will do is, in those situations the company will initially transfer that amount to unpaid dividend account. Once the registration process is completed, whosever name appears in the register of members, for those persons, the dividend will be transferred to that particular individual, whosever name is appears in the book. For them, the dividend would be transferred. Okay, so here these all provisions are mandatory for the company for the purpose of payment of dividend. If the company fails to accept them, or if the company fails to follow these provisions, in such cases, the company is liable for default. If the company could not pay the dividend within a period of 30 days, then the officer and the company are liable for a punishment or imprisonment up to 2 years and fine of 1,000 per day until default continues. And if they, even after 30 days, they can pay the dividend, but they should pay with an interest of 18% per annum until the default continues. Okay, so these are the important points relating to the dividends. In today's topic, we have seen this particular topic on general meetings and topic on dividends. And tomorrow we will cover the topic on accounts and what do you say, audit, and we would try to even start the negotiable instrument act. Okay, which is very important. In tomorrow's class we will start negotiable instrument act, and we'll just go through what is our audit and what are accounts. So please, before preparing for the exams, try to go through all these provisions. Since it is a rapid revisions, main important points and main provisions I am discussing, but in detail it is very important for you to refer the institute book, and please try to read the previous 5 years suggested answers. You need to prepare the previous 5 years suggested answers for your examination. From there only you would get many practical. 5 to 10 years, if you could get 5 to 10 years suggested answers in RTPs, please go through them. They are very, very important, and you would understand the pattern how they are asking in the examination, and you would know what kind of practical questions they are asking, and you should also know how approach to write these practical questions. And please try to write the mock exams which are kept by the institute, either the online mode or offline mode. Please try to attend it, so that you will try to manage your time within 3 hours. You would know how to manage time and how fast you can make up to write 100 marks for the 3 hours. Okay, so thank you so much. See you in tomorrow's class for the remaining chapters. Thank you.